Welcome to today's class. Today we are going to look at December 2024, BDA December 2024, question number 24. December 2024, question number 24. I will read. You are a tax consultant for Wasafi Solutions Limited, a Kenya company that specializes in renewable energy technologies. The financial year ended at 1st December 2024, and the company is preparing its financial statement for tax compliance and planning purposes. Below is the financial data by the company. Revenue 80,000, cost of goods sold 40,000, operating expense 15,000, interest expense 3,000, depreciation expense 2,500, other income taxable 5,000. Current tax rate is 30% and unutilized tax credit from research and development is 1,200. Then research and development expenditure is 8,000. Then dividend declared is 4,000. Loans from directors is 500, and allowance for our bad debts is 600. Depreciation is on a straight line, which is equipment valued at 10 million. This one you can easily find depreciation on a straight line. You just take initial amount, then you divide by useful years, which is 2.5. Then the company qualify for 100% deduction on research and development cost incurred in renewable energy. So this one should research and development is the cost of 25%, and the amount was research and development is 25% of 10 million. 10, 1, 2, 3, 1, 2, 3. So it means it qualifies for 2.5 million research and development investment deduction. The interest paid on director loans, this one is taxable. Declared dividend is subject to 5% withholding tax. That one will be taxed. Only 50% of provisions is allowable as a deduction for tax purposes. We have provision allowance for bad debts is 600, but only 50% will be allowed. It means the other 50% is non-allowable, so only 300 will be allowable expense. So other income include from gain from the sale of assets which are taxable. So we have an income of 5,000. This one we shall include other incomes and tax it. Additional tax relief on research and development investment is 10% of RD and 10% of RD. So additional relief. So we have 10% here. 10%. So this one is relief on research and development. So research and development, we have here expenditure. We also have a relief of 10%, so which is 800 there. Additional tax relief on research and development investments, 10% of RD and costs. I think we are done. Let's look at the questions. Part A. Prepare a statement of profit or loss to determine the taxable income for Wasafi Solutions Limited for the year ended at 1st December 2024. So here we need to it's Wasafi Solutions, Wasafi Solutions Limited. So we are preparing statement of profit, statement of profit or loss. It's for the period ended that 1st December 2024. So the first thing we need to start with revenue. How much revenue did Wasafi earn? Revenue. It was the revenue was 80,000. Then next we need to look at cost of goods sold here. We have cost of goods sold, it was 40,000. Cost of goods sold, it was 40,000. So we can determine the profit. So we can determine the profit. What is our profit? It will be 80,000 minus 40,000. It will be 40,000. But we are told that there were other income which is taxable. So we have other income which is taxable. We had other income here of how much? 5,000, which is taxable. So it means the total income will be 40 plus 5,000. So it means this is the total income. You can write here. This is the total income. So we can also have a look at the expenses. Less allowable expenses. Less allowable expenses, and the first one is we have operating expense of 15,000. Operating expenses of 15,000. Operating expenses of 15,000. 15,000. Next we have interest expense of 3,000. Interest expense is 3,000. What else do we have? We also have unutilized. This one. Next, research and development. This one can qualify, which is 8,000. It's 8,000. Then what else do we have? Allowable for bad debts, which is 300. Allowable for bad debts is 300. Because allowable for bad debts is 600, but we are told that only 50% is allowed. Loan from directors, we are told under note number 4, note number 3, that is non-deductible. So this one is not included. Dividend declared is 4,000. We shall look at that one. Unutilized tax credit, we shall also look at that one. I think we are done. Depreciation, we shall look at that one. We are done. Depreciation, this one, company qualifies as for 100. We also have this one, investment deductions. We can add this one, investment deductions. I think we have already calculated that one. We have calculated that one, and we got 2.5 million. So it's 2,500 because it's in thousands. Remember to include here in thousands because our values, our figures are in thousands. Yeah. I think this one, the declared dividend, other income, we have included additional. We have included that one. I think we can proceed to go and find. So let's come and net profit. So let's see the total expense. Total expense is how much? Total expense is 28,800. So what about the net profit? Net profit is 16,200. So our net profit is 16,200, and the question was asking what statement to determine the taxable income. So this one is the net profit, or also you can say it's the taxable income. Income. I think we are done with part A of the question. Let's look at part B of the question. That was 8 marks. You could have easily scored 8 marks. Part B of the question, they want to determine the total current tax expense. We are told that so this is our tax payable, or our taxable income is 16,200. So this is our taxable income, 16,200, and we are told current tax rate is 30%. So to determine the tax payable, it will be 30%. 30% multiplied by taxable income of 16,200. So this is your tax payable. Then you could have easily scored your 2 marks. 2 marks. Let's look at part C of the question. Let's look at part C of the question. Compute. Part C of the question says compute the next tax payable after accounting for tax credit and liabilities. The tax payable is 4,800. This is the amount Wasafi Limited was supposed to pay. So this is the amount that they were supposed to pay, but we need to factor in the tax credit. So the first tax credit is here. We are told unutilized tax credit from research and development is 1,200. 1,200. So we can count this one. 1,200 unutilized tax credit is 1,200. What else? What else we can include here? We are told that additional tax relief on research and development investment is 10%. So we can also include this one, additional tax relief. Additional tax relief, we can include that one. Additional tax relief. This one is 800. We can make this one negative because they are reducing our tax liability. So this one is negative 800. What else? We need to look at the dividend. You see that the declared dividend was 4,000. So declared dividend was 4,000. But the policy says that the company needs to retain 60% and to issue or to declare 40%. So the company declared 4,000. But what was the supposed dividend to declare? So supposed dividend to declare. Because we see they declared a dividend of 4,000, but supposed dividend they were supposed to declare 40%. So this was the profit. Then we need to less the tax they were supposed to pay. So of this amount, they were to retain 60% and declare 40%. So they were supposed to declare 4536, but they declared 4,000. So what does that mean? It means they under declared the dividend. So by how much will be this one minus 4,000? So they under declared the dividend by 536. So for this, they will incur an extra cost of 5% because dividend is taxed at a 5% rate. They will have to pay a tax of 5%. So on the shortfall they declared. So meaning this one will be 536 multiplied by 5%. So it means they will have to incur an extra cost of 26.8 of the underdeclared tax. So it means here we need to add here shortfall on declared dividend or shortfall on dividend tax. So this one is how much? It is 26.8. Is there anything? I think we can now calculate the next net tax payable. So it will just be a summation of this one. You can just see alt equal and equal summation of that. So it will be 28,286. So this is the tax they will be supposed to pay, and then you can easily score your 6 marks. Let us look at part D of the question. Let's look at part D of the question. Part D of the question. Assess the impact of dividend on the overall tax liability. As we have explained, they were supposed to declare 45, but they under-declared the dividend. They are supposed to declare 40% and retain 60%. So if they were to declare 40%, it was supposed to be this one, but they under-declared, leading them to pay an extra tax of 26.8. So assess the impact. So here we can, of the overall, so we can say that dividend declared is below the set standard, because they were supposed to declare 40%, but from the look they under declare it is around 30 something. Is below the set standard. As company are supposed to declare 40%. I think it's fair. 40% and retain 60% of the profit. Yeah, the profit. Yeah, I think so. And distribute. Supposed to declare 40% and retain 60% of the profit. So they are supposed to declare 40% and distribute to shareholders and distribute to shareholders and retain the 60%. So what was the impact on tax liability? So we can say in the event, in the event of less dividend declared, or the event of less dividend distribution, we can say the company is charged a shortfall of 5%. 5% on the shortfall. A shortfall of 5% on undeclared or on undistributed dividend. In this case, which was supposed to be how much? So in this case, we're surfing. We have to overpay by 26.8. Or in short, you can just say it increases the tax liability of the company. In summary, you can just say it increases the tax liability of the company. Then you will be done. I think that's enough for today. We can stop there, and thank you for your